Good morning, I'm Maiki Oreta and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. The headlines. The Philippine Central Bank expects an uptick in inflation for October. Philippine shares closed the shortened trading week at their lowest level since September 16th. Where is the PSEi index headed, especially with the U.S. elections looming next week? We'll break it down with Jonas Rovelas, a senior analyst at Reyes Tacandong. The new NNIC Infrastructure Corporation assures the public that contingency measures are in place to manage a 16-hour water service interruption at the airport this busy long weekend. And the Asian Development Bank warns of the damaging impacts of climate change across developing Asia and the Pacific. First, a look at the financial markets on Wall Street. Major stock indices closed lower, with the tech-heavy Nasdaq falling 2.8%. That's after Microsoft and Meta platforms highlighted growing artificial intelligence costs that could hit their earnings. Shares of both companies and other so-called Magnificent Seven mega-cap tech stocks also slipped.
I think we're really seeing this pullback in tech that seems to be leading us. You know, we had the earnings from Meta and Microsoft, and today we're awaiting Amazon and Apple. And I think what we're seeing in the market overall is this decision that maybe we were a little too optimistic, a little ahead of the curve of what AI can do so quickly.
Shares in Europe also closed lower, ending October with its steepest loss for a year. That's as investors weighed earnings and the UK's recently unveiled new budget. The pan-European stock 600 closed the session 1.2% lower, with all sectors in the red. Here in the Asia-Pacific, markets opened lower, with Japan's Nikkei 225 down 2%. Trading at the Philippine Stock Exchange is closed today for the All Saints' Day holiday. In the commodities market, both oil and gold prices are up. Brent crude rose nearly 2%, trading at $74 a barrel, while gold slightly increased 0.1%, trading at more than $2,700 an ounce. The Philippine Central Bank expects a slight rise in inflation for October. The BSP projects the consumer price index to fall between 2 and 2.8% for the period, a bit higher than September's four-year low of 1.9%, but still it's within the government's target range of between 2 to 4%. The central bank attributes the expected uptick to higher prices for vegetables, fruits, and oil, alongside a weaker peso against the U.S. dollar. However, lower costs for rice, meat, and electricity could help keep inflation in check. As a key economic indicator, inflation shapes consumer spending and guides the central bank's policy decisions. The official October inflation data will be released on November 5th. Now, foreign investments in the Philippines surged in September, signaling a positive shift for the economy. Net inflows exceeded $1 billion, up from $534 million in August. Gross inflation inflows also jumped 85% to $2.53 billion, with most of these investments flowing into peso, government securities, and the rest into listed securities at the Philippine Stock Exchange. Year to date, the Philippines recorded net inflows of $3 billion, a dramatic shift from the $387 million net outflow during the same period last year. This surge in foreign investments reflects growing confidence in the Philippine economy. It's a boost that can help strengthen the peso, increase market liquidity, and provide funding for key government initiatives. Now, the fight continues for Energy Regulatory Commission Chair and CEO Mona Lisa Dimalanta, even as her suspension order has been lifted. On BNC's agenda, Dimalanta acknowledged that the complaint filed by consumer group Nasacor remains unresolved. In September, the Ombudsman issued a 6-month suspension against her, alleging grave misconduct and abuse of authority after she approved Meralco's power rate hike application. While the suspension order was recently lifted, the Ombudsman has yet to explain the reason for doing it.
Tuloy pa rin po yung kaso, pero dahil po sa pag-uutos ng Ombudsman through the Office of the Executive Secretary, kailangan ko na pong bumalik sa trabaho. I think this is the only time that, sabi ko nga po sa mga kakilala ko, this is the only time that I'm happy that vacation is interrupted.
NASACOR says that they were surprised and not adequately informed about the lifting of de Malanta's suspension or the Ombudsman's decision to deny the request to charge her with indirect contempt. The group is now consulting with their legal team for their next steps.
Kung sa lifting ng suspension na yan, medyo maiiba ang ating pag-uusapan ngayon at inaantay lang namin ngayon yung copy namin, yung order ng October 22, October 22, 2024 na hanggang ngayon hindi pa namin natatanggap.
This development holds significant implications for the business community. With uncertainty surrounding the ERC's leadership, energy companies and industry stakeholders may face delays in policy decisions and approvals, impacting plans for new projects and potentially influencing energy pricing and supply consistency. Now, in other news, contingency measures are in place to manage a 16-hour water service interruption at the Ninoy Aquino International Airport, which will take place today until tomorrow. San Miguel Corporation's new NAIA Infracorp, or NNIC, assures the public that adequate plans are in place to handle the outage, which will affect Terminal 3 from 2 p.m. today until 6 a.m. tomorrow. This interruption is due to maintenance work at Maynilad's Butatan treatment plant. To limit its impacts, NNIC will tap into Terminal 3's water reserves and position water containers as needed in restrooms. They will also have water trucks ready to replenish supplies. Passengers and airport staff are urged to conserve water during this period. This interruption is seen to affect thousands of travelers and staff during the busy November 1 and 2 long weekend. Now, on another front, the Asian Development Bank warns that climate change is poised to have severe economic consequences for Asia and the Pacific, threatening growth and stability across the region. The bank projects that under a high-emission scenario, the region's gross domestic product could decline by up to 17% by 2070. Coastal flooding is expected to put 300 million people at risk and could damage trillions of dollars worth of coastal assets. For the business community, this translates to potential disruptions in production, infrastructure, and supply chains. The ADB stresses the urgent need for investment in climate adaptation, with estimated annual costs ranging from $102 billion to $431 billion, far exceeding the $34 billion tracked in the region for adaptation between 2021 and 2022. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back to Basis Points. Philippine shares closed Thursday at their lowest level since September 16th. The PSE index fell nearly 2%, ending the abbreviated trading week back at the 7,100 level. Meanwhile, at the foreign exchange market, the peso slightly strengthened against the dollar, closing at 58.10. There is no trading today in observance of the All Saints' Day holiday. Now, with the U.S. elections in the spotlight next week, how might the Philippine stock market be positioning itself ahead of this major event? To discuss this and more, we're joined by Jonas Rovelas, a senior advisor at Reyes Tacandong and Company. Hi, Jonas. Thank you for being with us this Friday morning.
Good morning, Maiki. Good morning to your viewers.
Okay, Jonas, 4 days until the U.S. presidential elections, the PSE index slid sharply yesterday. Early into this session, early into trading, it was down by well over 1%, and it ended this session down by 2% at 71.43, back at the 7,100 level. Sharp weakness in the financials, holding firms, services. They were down by 2.7 and 1.5 and 2.4% respectively. How much of this was because we were tracking the losses in Wall Street overnight, and how much of it is because of on account of election-related volatility in the U.S.?
Well, basically, I'd probably say 60% is primarily driven by the impact of the U.S. elections that's upcoming. And probably close to 40% was really driven by the geopolitical risk and the re-rating of the Fed cuts amid all of these noise that we're experiencing.
Mm-hmm. Definitely a lot of information for investors to mull over. The biggest thing on the docket next week is the elections in the U.S. Different administration, different fiscal and monetary policies. How much weight would you say the U.S. presidential election has on the global economy?
Well, basically, I think given that it's still the biggest economy, it's very difficult not to discount the potential impact of the election. Again, an old adage, if the U.S. catches a cold, Asia gets the flu. So I guess this is how significant the elections are. And especially with former President Trump being in the ballot, one can't help but remember his trade war in his first term.
Following that adage, when the U.S. sneezes, the world catches a cold. When the U.S. gets a new president, can you fill in the blanks, Jonas? What happens to the rest of the world, particularly the Philippines?
Well, basically, I guess the impact really is that if right now we know that the U.S. economy remains resilient. People were probably more than a month ago, people were expecting probably, the U.S. economy is headed for a soft landing. But given the present set of data that came out, it seems that the U.S. economy is not yet close to the runway. It seems that the economy remains resilient. So there were, people were pricing less cuts this year, and probably just the 50, and most of the cuts will happen next year. So given that perspective, people are most likely want to expect a continuation of the present policies. And this is well embodied by Vice President Harris. However, Trump offers something different, especially when it comes to geopolitical risk, especially for third world countries like the Philippines. This is very important to us because we practically import a lot. So supply chain disruptions tend to bring in inflationary pressures. And this has been our challenge since 2022 when the Ukraine-Russia war started. And now we have two wars that has affected, again, particularly one important commodity that we import, which is oil. So that is something that's very significant. Trump offers to end these wars. So that's something that, a lot of people are looking at, thinking that his business sense would kick in and, try to fast-track cuts in interest rates. So these are things that, a lot of people are going to be focusing on. But those are good points on the part of Trump. But for us here in Asia, particularly, we will be affected by his trade war. If he were to pass on that additional 10% across the board on non-domestic products that are not produced in the U.S., then definitely exports from the Philippines will be affected. It will become expensive.
Yeah.
Now, what we've seen in the last trade war was most of the other currencies tend to compensate these tariff costs to additional depreciation of their currencies. So
given that Trump was a previous president, we already have an indication of what Trump 2.0 might be with the trade wars. But right now, Jonas, who are the markets pricing in? Are they pricing in a Harris win or are they pricing in a Trump win? What's your view on this?
I think right now the market is really given, well, there's been this disparity of, if we were to look at betting polls, then Trump is leading. But, I recently did a poll on Twitter and, it seems that, they're still expecting a Harris win. But this will be a very neck-and-neck race. But the market seems to be bracing themselves for a Trump, a Trump surprise. So that's why we're seeing more of the sell-off. The dollar getting a bit stronger and the yields of the 10-year yields are getting higher, which is supporting the U.S. dollar.
Yeah, you mentioned a possible, it's a really tight race, but you mentioned the possibility of a Trump win. I was on the Bloomberg terminal a while ago and, an analyst talked about stocks rallying in the U.S. ahead of a potential Trump victory. But then, this isn't just about the presidency in the U.S. There's the control of Congress. There's control of the Senate. And what that analyst said was that a clean sweep for the Republican Party should be seen as a sign to sell. They say that Trump is good for good for corporates because of the proposals to lower corporate taxes, which are going to benefit corporate earnings. But why is it that they say that a clean sweep victory for the Republican Party would be seen as a sign to sell?
Oh, well, basically, I guess at this point in time, people are not convinced with his tax policies and what he plans to do and could really affect the economy, especially with the tariff war. Definitely that will import inflation back to the U.S. And that would, again, jeopardize the strength of the U.S. economy that, the U.S. is experiencing now. So people are, trying to look into that aspect that, right now the economy is doing well. And if he's going to, they believe the Fed have already started the easing cycle. But if they're going to have this trade war, then, there could be a reassessment again of how the inflation picture would look like. So that could be, right now with all of this potential uncertainty. And one thing that I always tell investors, when in doubt, pull out. And this is, I think, what is already happening. People are just given the run-up since start of the year on Wall Street. People are capitalizing on gains, whatever becomes the outcome of the elections.
We just have time for just one quick short question, short answer. In the Philippines, we recorded net inflows of $3 billion, a big increase from the $387 million net outflow in the same period last year. Can you talk to us about the surge in investor confidence, which we've seen as of late, and might that continue regardless of who wins the presidency in the United States?
Okay, I think there are three things that's driving the optimism. One is that in the 2025 budget, we're expecting a lot of continued infrastructure programs. So that will, continue to support a growth above 6%, probably 6.5% next year. Second is that we're expecting a 100 basis point cut on policy rates, and you have the tailwind of the national election to help consumption growth. No? So that, I think, investors, particularly foreign that started to come in, are starting to look at the sustained recovery of the Philippine economy, its resilience. So especially, hopefully that, we continue to keep inflation within the 2 to 4%. So that, I think, is a story enough to probably trigger those investments. Plus, the weaker peso is actually creating those potential adjustments if there are some valuation issues that fund managers are worried about.
Okay, Jonas Ravelas, thank you so much. That's all the time we have now, but thank you for sharing your thoughts with us.
Thank you.
Now, that was Jonas Ravelas, Senior Advisor at Reyes, Tacandong & Company. Now, we're taking a quick breather. Basis Points will be right back. Welcome back to Basis Points. Elsewhere in Asia, China's manufacturing activity expands for the first time in 6 months, a positive signal for the global economy. The Purchasing Managers Index rose from 49.8 in September to 50.1 in October, just above the 50-point threshold that separates growth from contraction. This uptick is encouraging for global markets as China's recovery could boost the demand for raw materials and exports from partner countries, including the Philippines. For emerging markets, a more stable Chinese economy can also mean stronger trade links and a more reliable outlook for regional growth. Now, before we wrap up, heads up for 2025 as Malacanang has just released the official list of regular holidays and special working and non-working days for the next year. The regular holidays include New Year's Day, Monday, Thursday, and Good Friday, Labor Day, Independence Day, and Christmas Day. special non-working days will include Ninoy Aquino Day, the Feast of the Immaculate Conception of Mary, and New Year's Eve. Special working days include the anniversary of the EDSA People Power Revolution, Chinese New Year, and Christmas Eve. For businesses, having the 2025 holiday calendar in advance allows for more strategic planning around peak seasons, staffing, and supply chain operations, helping to minimize disruptions and optimize productivity throughout the year. And that's it for Basis Points. I'm Maiki Oreta. We'll be back next week for more news on the financial markets and more. Keep it here on BNC, the Bilyonaryo news channel, always on top.